We count you down to these closing bells, 42 minutes to go. And in the green is, once again, well, energy companies. Look at this, EOJ on the higher side, Exxon as well after their massive profits. We'll see what Biden says, of course, after the closing bell about maybe a bit of a windfall tax being discussed for such energy producers. Archer Daniels is also on the side after we see, of course, that Russia-Ukraine downside, though. The companies that ran up hard last week, of course, if we're starting well, Apple is now off by 1 point. Friday, but Meta still giving away its value, down by 6%. Extraordinary. Amazon as well, after its crash lower on Friday, we see it off by 1.6%. So interesting to see Pfizer behind me on the lower side ahead of its earnings this week. We think about some of the money coming out of technology with the NASDAQ 100 off by 1.4%. Maybe that's because we've got yields pushing so much higher. We're up 9 basis points. Let's call it 10 on the 2-year. We see a dollar strength, euro weakness as we saw that inflation data just once again showing the work still to be done from an ECB perspective. The pound is on the lower side, weakening by 1.3%. The Bank of England is later this week. New York crude pulls back, interestingly. That's more of a story of the weakness in China, the data that we got in terms of factory, and really the growth story that isn't one of growth in China. Wheat, as I say, that really is the geopolitical ball that's being played at the moment. The worry about Russia saying, oh, we're backing away from this grains deal with Ukraine. That flow of grains, of wheat and the like, become far more curtailed, so the price rises higher. And on an individual basis, Meta, as I say, one of the worst performers. Global payments, that's hit by its earnings, not living up to expectations. And as I mentioned, Wynn Resorts as well, one that Carol shone a light on. Really, some billionaires coming to play and taking stakes when some of the chips are down. I didn't mean that pun even. Meanwhile, let's talk about Options Insight. We are just about 40 minutes, as I said, from the closing bell. Now, we want to get you up to speed with the day's options trading. And Abigail Doolittle is looking for influence of yields on stocks and volatility. Abigail, take it away.
Yeah, it's pretty amazing, Caroline, because when you think about yields backing up in such a big way this year, that 10-year yield up about 2.5% right now, hovering around that 4% mark, off of the pandemic lows, up closer to 3.5%. Usually these are the types of moves that you see in a much longer period of time. So really creating, I should say, a repricing of risk. Alan Nuckman, CEO of Bullseye Option, weigh in here, because right now we have the 10-year yield at 4%. It almost seems as though, I know stocks are down just a little bit today, but up in a big way for the month of October, that investors are starting to digest these higher levels.
Right, and 4%, we've got to put that in perspective. I've been doing this for a long time. The first 17 years of my career, the 10-year note yield was always above 4%. It peaked at 16% back in the 80s. So that used to be normal. Now, recently, the last 5 years, obviously rates got almost down to zero. And now we're back to not even the midpoint of the price action that we've seen over the last 30 years. So I think people are aware of that now. And it looks like rates, if we look out to the futures, are declining as we get out into 2023 and 2024. So the rate hike cycle may be over. We've got the dollar coming off those extreme highs, down for about a month. We've got the VIX down at 25 here yesterday. And stocks had a 10% surge in just 2 weeks. So I think we're starting to digest this information, like you said.
Yeah, and I'm not sure how it is that markets are so certain on the idea that hikes aren't going to simply continue into next year, although I guess we'll get more color on that on Wednesday from Fed Chair Jay Powell. But in terms of this year, because we are, it seems to me, although maybe not at this moment, but we've been in a bear market for quite some time, a strong downtrend, but there have been these strong counter-trend bear market rallies. One of them was more than 10%, the June to August one, more than 20%. Right now, I think we're up about 10%. So do you think that we're going to get another 10%, or do you think that this is actually a sustainable bottom?
Well, I just look at the numbers. I just look at the charts. And the chart pattern here is we traded here between 3,600 and 3,800 for a number of weeks in the S&P. That targets 4,000 on the upside. And right now we're at the 3,900 level, which is the halfway of the drop from the top that we had in August. Like you said, we had a big run up with earnings boost last quarter. And even though some of these stocks have surprised on the downside in their price action, they still made billions and billions and billions of dollars in pure profit. And that's what people have to remember.
Yeah, that is certainly a good point to remember. And speaking of one stock, though, that I'm guessing that they're making, I don't know if it's billions, but they're making quite a bit of profit, but it's not really showing in the stock. Baker Hughes. Now, Alan, it's so interesting because this is the best sector, not only on the year, I think it's up more than 50% this year, but last year was also up 50% energy. But Baker Hughes is struggling, but you like it here.
Yeah, it's got a great chart pattern here. It's been between 20 and 30 for the last couple of months. But the bigger picture has been between 20 and 40 over the last year. Let's remember Schlumberger is up 50% on the year. This stock has stalled in comparison, has a lot of upside potential. A breakout of this 20 to 30 range sends it to 40. So the way I'm looking to play it was an in-the-money option, a $20 call. Again, that's below the low. And I'm looking at an April option. So an April option has 6 months of time for development. That option's trading for about $8 and $7.50 in the money. It's got a lot of time, 6 months of time. And if we get to that modest 40 level, this option gains 150%.
That modest 40 level, more than a double, keeping it simple, but a bit of a daring trade. Alan Nuckman, CEO of Bullseye Option, thanks so much for joining us for Options Insight today. And from New York, this is Bloomberg.